Ross Gerber, President and CEO of Gerber Kawasaki Wealth and Investment Management, joining us live from Santa Monica, California. Ross, great to see you. You see good old Tesla. I know you're a bull, under a little pressure today. That's an understatement, 14% to the downside. Buying opportunity?
Oh, for sure. I mean, Tesla's never been in a better position to achieve their goals than they are today. I mean, when you look back a year and you see how far the company's come, 3 out of the 4 quarters they've had cash flow positive. They have the largest cash position they've ever had. And this was our big concern going into this year was, will Tesla have enough cash and cash flow to achieve their goals and their dreams? So, you know, that seems to be taken off the table now. So now Tesla's a sustainable company making a lot of cars, and the next real step is full self-driving. That became clear on the conference call. So I think a lot of investors were expecting some sort of like blowout profit, and that's why the stock's down today, because obviously they're not yet profitable. But I don't look at Tesla's goal is to be wildly profitable. It's their goal to sustain, to build sustainable transportation, and that they're doing very well. And the profits are going to come, but it just might be a little bit more time.
Right. Well, you know, we had David Kudla on Morning Trade Live this morning. He's bearish. His concern was the cash burn. Are you concerned about that?
Well, there is no cash burn. I mean, they had cash flow positive $614 million. So their cash position, once again, is really good, and we're going into the stronger half of the year for Tesla, so we expect even better numbers in Q3 and Q4. But I think the most important thing that most people are not paying attention to is if you go back a year, Tesla's revenues are up 60%. Their car deliveries are up 100% year over year going, you know, through this year, and they're going to achieve their goals of 360,000 cars sold this year. We you know, are very happy with it, and of course there's a lot of bumps in the road to do what they're doing, and short-term expectations, I think, are sort of a waste of energy. What we're really focused on is the next couple of years, and even the next, you know, year with Tesla looks amazing.
I hate to sound aloof, but does anybody care that yet another executive is gone today, right? We heard the latest one, J.B. Straubel, the chief technology officer. He helped to develop the battery. He was a founding member of Tesla. He was one of the inner circle gentlemen in Elon Musk's inner circle. And he's out. He's yet another executive out the door. Does anybody care anymore? Is it just Elon Musk's vision that?
I think JB matters, and I don't look at JB as being like out the door. You know, JB was a huge asset over time to the company, and his contribution is great. But he's been at the company for a very long time. He's made a lot of money. Last year was incredibly stressful for everybody. And I could see that his goal was to get the Model 3 out, see the company be sustainable, and maybe take a step back and take a little time off. If you work for Elon Musk, you work 24 hours a day. So I appreciate his contribution to the company. He was truly an asset. And I think the team there is super smart and deep. And Drew, who's taking his position, is more than capable and qualified. So you know, it does matter, but I think, you know, it's part of business.
What's your real price target on this thing? I mean, the recent high was 387 in the last 52 weeks. The low was 170 and change. It's in the 220 range now. Where do you really think it should be priced? Because you're a bull on this stock, right?
You know, I think that Gene Munster said it really well yesterday. I love Gene, and he does great work. And you know, we were saying, like, you know, the stock price could be valued whether it's 40 billion or 50 billion. It's really hard to say what the company's worth on an equity basis any one day. We can all choose different methods to value the company, but because their finances vary so widely quarter to quarter, it's tough to call. So we look at metrics like their actual sales numbers and apply a multiple to that, because that seems to be the easiest way to come up with a number. But the way we look at it is Tesla's on track to do, let's say, 27 or 28 billion this year, and it's trading for a little over 40 billion. So, you know, that's like 1.5 times sales or something. This is a very low multiple in comparison to his peers, which would be companies like Uber or Waymo, you know, these more advanced growth tech companies. And so Tesla's the cheapest of all of the growth stories, and yet it's the best of all the growth stories in technology. So that's how we look at it on a relative basis. Tesla's dirt cheap. We're long-term investors. This is a great entry point right now.
You know, one person called the fact that they can meet their guidance, they reiterated the guidance for delivery, a head scratcher, just wondering how they will absolutely do that, coupled with the fact that they have soft gross margin, right? The gross margin profit fell. It's now less than 20%. So you think they can do it and meet those numbers?
Yeah, absolutely. I mean, if you look at the production right now at Fremont and what they're doing like today, they're close to, doing that. So we expect 96,000 or so cars this quarter. But as they now ramp in China, and we're going to get some China production by the end of the year, and maybe some Model Y production by the end of the year, we expect their numbers to be well over 100,000 cars in Q4. So maybe 105,000 cars in Q4. So they'll get right to 360. That's typical Elon. But that's actually double the amount of cars and deliveries that they've produced and delivered from the year before. So, can you name any company doing that in technology? There's zero. So, we're very, very, and especially making cars. The second thing about the margins, you have to keep in mind there were 3,000 cars sold this quarter that were basically old Model S's that had old technology and that they basically, I think, sold at cost. So that factors in the margin as well as ZEV credits and non-ZEV credits. So, to look at actual Model 3 margins, they're doing just fine. Average selling price of about 50,000. They're making about 10,000 in gross profit per car. And with full self-driving being a higher margin product, the margins will improve once full self-driving's out, and we expect that by the end of the year too. So, this is still a transition time for Tesla. I think investors have that in the stock price now, that there's a lot of doubt about their future, and that's why there's opportunity in buying the stock today.
All right. Ross Gerber, great job making the bull case. I'm sure you're tired of having to explain it to all those bears out there. Good job, Ross Gerber.
Never get tired. It's a great cause.
CEO of Gerber Kawasaki Wealth and Investment Management. It's wonderful to have you on. Thanks, Ross.